One summer moment can change a child's life. Through Toys for Tots Give and Go initiative, your support provides books, games, toys, and outdoor adventures that spark curiosity, creativity, and a love of nature. Whether it's fishing, learning a new sport, reading under a tree, or playing with friends, these moments build confidence and lifelong memories. For too many children, those moments never come. You can help change that this summer. Visit toysfortots.org. Toys for Tots, delivering hope beyond the holidays.
This episode is brought to you by Workday. Workday is the enterprise AI platform for HR, finance, and IT with a deep understanding of your organization's context and guardrails, giving you accuracy to not just get work done, but get it done right. It's a new Workday.
Listen, all you New Yorkers. Easy, taxi. Okay, man, we're looking around.
This is the 77 WABC minicast.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
So, again, happy July 4th to everybody. And happy July 4th to the stock market, okay? Stock market this past week, I know, was a little bit shortened, but we just keep hitting records left and right. We're just south of 53,000 on the Dow, which was up almost 1,000 points this past week. NASDAQ record, S&P 500 record, Russell 2000 small caps record. Somebody said to me it was the highest in 35 years, the best performance in 35 years for the Russell 2000. And the question is, what kind of interest rates are we going to face? And our new Fed Chairman, Kevin Warsh, what's he going to do? And no more forward guidance. I don't know. Things look awfully good to me. Freedom and free enterprise. Life, liberty, and the pursuit of happiness. And profits are rising sharply. Anyway, we got two pals of mine on July 4th. Couldn't be better. Jack Bouroudjian, CEO of Cetera Financial Corporation, Jon Najarian, co-founder of Market Rebellion. And I look at Jon Najarian and I think immediately the VIX index, which is 16, which looks pretty low. So, gentlemen, thank you for doing this. Let me start with Jon Najarian and his VIX index. What is it telling us? I mean, it all looks too good. It looks too good. We keep waiting for this bone-crushing correction, but if anything, it's a melt-up, not a melt-down.
Yeah, well, the fact that we've got crude oil prices coming down as fast as they ever have. I mean, I've never seen them move down this fast, Larry. And I'm sure Jack will echo that as crude oil prices move, and virtually every vehicle on the road, except for the EVs, does require some form of crude oil, whether it's diesel, whether it's fuel oil in a ship, whether it's gasoline in cars and so forth. I'm driving through Indiana right now, Larry, and it's $3.07 a gallon.
Whoa!
So we have come down so fast. Now, That's not nationwide. Nationwide, I think it's $3.80 is the average. But, again, the fact that it's come down this much means that Mr. Warsh and the Fed are going to have a much easier time fighting inflation, because most of the inflation was indeed coming from energy prices. Energy prices are coming down. That's going to be good for goods delivered. It's going to be good for men and women that are driving to work, and people that are loading on airplanes and all the rest. So, like you say, there are a number of very positive factors that are going to be driving markets, and right now they're all driving them in the right direction.
Boy, I love that. You know, you're right. $68.50 WTI. It came out like a stone. $3.81 nationwide, but a lot of states are lower than that. I'm seeing a lot of blues on the AAA map. So, Jack Bouroudjian, let me ask, How far is this market going to go before we have to worry about a correction? How far do you think?
Well, here, let's take a step back. You were talking about a melt-up. If you think about it, the last few weeks have actually gone sideways. We've seen the market digesting a lot, especially with this big rebalancing that's been going on. And John can tell you a little bit about that, too. I mean, everybody is raising cash. They've got a big, a SpaceX, admission to the index that they have got to be ready for. So we're seeing it. And guess what? The market took it very, very well. I mean, we're less than 5% off the all-time high in the NASDAQ. We're 2% off the all-time high in the S&P, and we're at an all-time high on the Dow. I mean, this tells you right now, first of all, that, number one, earnings are still strong, okay? And number two, there could be a surprise upside rally the second half of the year, Larry. All right? Now, follow me with this. If you continue to see what's happening in crude, and by the way, my big Armenian friend was spot on with that. Okay, we could see crude oil go down another $10 from here, and it could be trading in the 50s. If we see that, and for argument's sake, let's take a giant leap of faith together and say that happens because of everything that we see President Trump doing. If that happens, you can see a 10% move higher in equities within 2 or 3 months. It's that important, and it's really that key to the bottom line. The other thing that I do want to add, by the way, is all of this strength that we've seen in equities has happened while we've seen Bitcoin lose 50% of its value. Usually when you see something like that happen, it's catastrophic. When you see an asset class like that everybody has been pumping up take a hit for 50%, usually it lingers in and there's some kind of an effect in other asset classes. We haven't seen that. If anything, it's been a wind in the sails for equities and for bonds.
And gold coming down?
Well, gold's coming down for a different reason, because there's less worry out there. Remember, gold was going up because you had the Middle Eastern countries buying. You had everybody that was buying gold because they were worried about inflation. Well, guess what? You have corn, you have wheat, you have crude, you have natural gas. Now, these are all at levels that we had at pre-pandemic. All right? So guess what? There is no inflation. The only inflation that people were worried about was being caused by crude. Everything that people were worried about, believe it or not, was crude related. So if we see crude come off, that's going to change the entire inflation story.
Well, you're going to get negative prints. Next couple of months are going to have negative prints on the CPI. I agree. I've made that case. I'm waiting for it to happen. Tell me about the Bitcoin collapse, Jon Najarian. What? And that's really something. It's gone down. I mean, Jack is right. It's gone down half. It's extraordinary. It hasn't taken the market down with it, but it's gone down half. Why is that?
Well, the Clarity Act is basically just fluttering on life support right now. That's, of course, the act that would, if Congress approved it and the president signed it, would basically make a lot of those digital assets available to institutions that otherwise don't quite feel the comfort level of owning those assets, those digital assets. And Bitcoin, of course, being the king of those, has suffered among the most in there. But you've also got Ethereum. This was up close to $5,000 per coin, and right now I believe it's closer to $1,500. So a lot of those assets that we're really counting on, the Clarity Act, that we're counting on a flight from traditional assets into the digital assets, just is not just stalled, it's really on life support. That doesn't mean I don't think that at, for instance, the mid-50s, that Bitcoin isn't a decent investment. I do think it is, but I don't think that we're going to see any moves significantly higher, for instance, back into the 70s, 80s, or 90s per coin until we get that Clarity Act passed. And if it doesn't pass this year, all the more pressure comes from people that are have been waiting for it for so long, and that they get frustrated. And they say, well, I guess we can't own this in this endowment or in that corporate balance sheet. So that's been a real problem for the digital assets, as much as it was touted as a potential savior for them going forward.
And just before we break, Jack Bouroudjian, why are the small cap indexes the S&P 600 is up 22% year to date, and the Russell 2000 is up about 21% year to date. They are the biggest performers by quite a lot. What's the message there?
I think that they're telling you that they are the supply chain to what is happening in the S&P 500. If you think about it, all that big AI story all have little ancillary stories that go along with them. Those little ancillary stories are your Russell 2000 stocks. But the one thing that I love about the Russell is the fact that it's got the highest short interest of all of these indices. That tells me that what I said earlier could be absolutely true, not only for the major indices, but also for that Russell index. We could see that pop another 10 or 15% over the course of the next 6 months.
Well, because people are going to cover?
Because they're going to be forced to cover, Larry. You see, we got the highest short interest in a market where you have gotten people making money. We have got earnings that are incredibly strong, and you've got unbelievers. I love that. That is the perfect recipe for a melt-up.
And wait, last one. So we do a little Dow theory here. Dow Transport's up 27%, 26.8% year to date. What does that mean?
That usually precedes a big move higher in other indices. If you remember, back in the old days, that's the way we used to think. These days, it's a little different. I mean, you get a 33-year-old that came out of MIT, he'd look at me like I was speaking Greek to him. But to me, that tells me that there is the basis and the foundation being built for a huge move in this market.
Oh, my God. A huge move. We've already had a huge move, so we're going to have a huger move. Profits.
Huger, that's a good word. I like that.
Huger move.
Yeah, I like the huger.
Profits are the mother's milk of stock. There's no let up in earnings. I mean, I check in. I get Ed Yardeni's stuff, and he's still looking at forward earnings estimates are huge. I mean, profits are driving this thing. There's no let up there.
As long as companies are making money, as long as earnings, and if you think about it, the PE is relatively sane and not insane. Look, we lived through the insanity of the dot-com bubble. We remember 200 times, 300 times over earnings. We're nowhere near that, all right? Even your biggest stocks, your trillion-dollar stocks are nowhere near that. So, look, I all I'm saying is that this is the next industrial revolution that we're living through, and I'm just so happy to be living through it now.
Well, life, liberty, and in pursuit of happiness, here we are, 250th anniversary. I just love this. Stock markets are roaring. That's got to mean something. Fellas, hang on a second. Jack Bouroudjian, CEO of Cetera Financial Corporation, Jon Najarian, co-founder of Market Rebellion. I'm Kudlow. We'll take a look at interest rates on the other side of the break, folks. Please stay with us.
This is the Larry Kudlow Show. Back to the Larry Kudlow Show.
So we're talking stocks, and I want to talk some interest rates. Jack Bouroudjian, CEO of Cetera Financial Corporation, and Jon Najarian, co-founder of Market Rebellion. Is there anything, Jon Najarian, in terms of the actual bond market right now, what is there a message about interest rates? I'm not sure I see one. Rates haven't really moved much. There's maybe a little bit of a decline in the break-evens. The CPI break-even tips, the 2 years down, that fell 7 basis points last week, and it's been falling. So that's an inflation expectations reduction sign, I guess you would say. But in terms of the spot market, I don't know, the 10-year note is still close to 4.5%. Are there clues here? The 2-year note is up to 4.14. What should we glean from this?
Well, I would say, Larry, that the clues are that we had that employment data on Thursday because, of course, we were closed on Friday for Independence Day. The employment data came in lighter than expected rather than hotter than expected. So one of the clues there is that helps the Fed in terms of it's not a catalyst for higher rates. The economy isn't overheating based on the employment data, and yet we dropped down to 4.2% unemployment, which was also good. And I think you're spot on. When we get the June and then hopefully the July reports on consumer prices, or CPI, as well as PPI, the producer price, we're going to see a big drop because, again, the biggest input is energy. That's why they always say, well, if you take out the volatile food and energy sector, well, you're going to be seeing a massive reduction in that energy price that people are paying, that companies are paying, and that is going to help Kevin Warsh and the Fed. Doesn't mean they're going to cut rates in July or after the Jackson Hole event and so forth, but it means that for those really thinking that we're going to see a couple interest rate hikes, I think they're exactly wrong. I think one more of these unemployment reports and perhaps one more of the CPI reports that, like you say, could be even close to that negative side, that's going to be very positive in terms of telling the Fed that they don't need to be increasing interest rates.
Jack, I think it's interesting that the bond rates have not fallen in tandem with the energy prices that you all both talking about. I mean, John opened by saying how rapidly they've fallen, and that's correct. I mean, we've gone from, in round numbers, the WTI has gone from about $115 down. It's now 68 and change. That's a huge move in only a few weeks, and I'm surprised that rates have not picked that up on the downside.
Well, remember, when we're talking about rates, we have two different markets. You have the long end, you got the short end. The long end is digesting a lot of different things between the geopolitical problems that we're seeing. But more importantly, remember, there is a real demand for capital out there. When you keep hearing about these $100 billion deals that these technology companies are throwing out there, that's a demand for capital. I mean, you think of interest rates as a rent on that capital. So, but the real message that I am getting from this interest rate market is it's screaming. It's too tight. It's way too tight. And that is when you look at a 3-month at 3.75 and you're looking at a 2-year at 4.13, that's a ridiculous flattening of the curve. So for me, I think what we're going to see is a couple of cuts that are going to be handed to this new Fed chairman over the course of the next couple of months. And that is going to be another, I think, more wind in the sails for stocks as we go into the end of this year.
And in particular, by the way, to Jack's point about the Russell, those stocks will react the most to, and if you've got record shorts in the Russell and all of a sudden you start seeing interest rate cuts, the Russell is going to explode because it's been waiting for years for those rates to come back down. So I think Jack's play on the Russell is exactly right.
Another melt-up. I like that. So I would guess Kevin Warsh will be more guided by what market rates do before the Fed. That's what I'm thinking, Jack.
He knows the market. And Larry, I like somebody who knows the market and is not playing the politics of the game and the dot plot and the speeches and everything else. Look, we got a real player now sitting in that Fed chair. I love it. I think, and the market's going to love it too. Usually the market tests a Fed chairman. This Fed chairman isn't getting that test because you know what? He's battle worthy. He's actually gone out there and he's proven himself in battle. So I love it. I think that the market is set up for a nice move.
Jack Bouroudjian, Jon Najarian, happy 4th, gentlemen. Thank you ever so much. Folks, we'll take a break. We're going to do some money in politics with Steve Forbes and John McLaughlin. I'm Kudlow. We'll be right back.
Oh, I went down to St. James Infirmary.